to boot up. Joe, you doing okay?
Yeah, not too bad.
Hey Facebook family, this is our first attempt at a live broadcast of a pre-recorded radio show. So this is Greg, myself, and Joe the producer is behind the camera. You can't see him. But welcome. We're going to try to do this every week, and so thanks for joining us. We're going to talk today about the market and some interesting things about retirement.
Yeah, today's show is going to be about not trying to time the market. I think there's a lot of danger with people trying to time the market and hanging in there hoping that it keeps going up, and we do hope it goes up, but now's not the time, I think, to get ridiculous about it. But Joe, we should be ready to go. Let me just fix this microphone here.
I'm recording when you're ready.
Good morning, folks. This is Greg Elie of the Prosperity Group Advisors, LLC, and we welcome you this Saturday and Sunday on WORD. Steve, how you doing today?
I'm doing well, thanks. You sound a lot better than you did a couple days ago.
You know, the doctor said I don't have a sinus infection, but it could happen real quick, and he gave me prednisone, and I hate taking that, and it kind of upset my stomach.
Well, but you're going to beef up, though. Right?
Oh, no, I'm going to beef down. I'm beefed up as it is right now. I'm trying to lose some weight, so I guess I'm on track.
I think we're both in that category, my friend.
Oh, well, hopefully that happens soon, but it's these allergies, and it's every year. Yeah. These allergies seem to happen, and this is the time to stay away from cheese and dairy and all that good stuff that's probably not that good for us anyway.
So that's true. Good point. Good point.
Well, the news has just been amok. I've been following the hearings. I'm watching just with total disbelief how they are trying to trump Trump's presidency, and the American people are the one that's going to bear the price of these political games, and I'm concerned about that from a financial standpoint.
Yeah, and it's interesting. We talk a little bit, actually we talk a lot about politics on here, and I'm sure people wonder sometimes why we talk about politics as it pertains to retirement planning, but for those of you watching Facebook Live, you'll know what I'm talking about. This is a pre-recorded show, but yesterday the market absolutely plummeted. I think it was 239 points, and it was all on the news of the scary news of what was going to happen with Trump care. And so politics definitely has a huge role in what it is that we do from a retirement planning standpoint. Sorry, as you're moving closer to retirement, those swings in the market can really affect what you're doing.
Well, we saw this during the election. People were in limbo. They were in complete limbo, not making any decisions, waiting for this to happen. And, it did what we predicted. It went up. And I still think it's going to continue to go up if some of the thing gets a little bit more reasonable. But, the latest news is he's brought in his daughter to serve with him. And I think that's probably a wise move because I think he's running out of people he can trust there. He's surrounded by the swamp.
Well, yeah, and I don't know if you saw Maxine Waters tweeted, I think yesterday or the day before, impeachment is around the corner. So, clearly the other side of the aisle, their total focus is not to make our America great or not to help the country. It's to do everything they can to derail Trump and to impeach him, which,
Impeach
to me
him for
is,
what?
Well,
winning?
Yeah, well, I think it's this whole bogus Russian thing that they still have absolutely no proof of. But anyway, that's a whole nother.
Honestly, I think the man is very intelligent. I think he's very calculated. I don't think he got to where he did by being stupid. And I believe that if they open that Pandora's box, he's prepared.
Well,
he's
I
prepared.
think so.
Hillary already made a campaign-like speech yesterday. So it's going to be interesting to see what happens, But on the economic front, the word of warning really to our listeners right now is we've been preaching sell high, buy low for a long time. It's like nothing, we haven't coined this ourselves, but the reality is people really need to think about what we're saying and not get greedy because our clients have been getting some tremendous returns on a fixed annuity. I mean, we've got clients that have averaged 6% on a fixed annuity. And folks, just so you know, I'm not saying that you call us, that's what you're going to make. That's not my implication. I'm just telling you that for a safe money account, a safe, sound strategy, that people are getting good results. And that's the key thing that I want our listeners to hear. And you can reach us, folks, at 864-989-0176. That's 864-989-0176. And you can reach us. We've been getting a lot of contacts from the web. And you can go on www.mymoneyissafe.com. Now, Facebook is a little bit broader, so if you're going to try to call us out of the area, it's 1-800-440-0434. And what I would suggest, leave a message. Somebody will give you a call, and we'll set up a time to get together because we have been very, very busy. We're going to start a series of seminars and things of that nature, so make sure you give us a call. But Steve, that's my word of warning right now, is people don't need to try to time this market.
No, you're exactly right, and you were talking about the returns, and I'll let you obviously expound on that a little bit more since it's your show, but I don't know why I just said that. But, the other side of that is that people forget is we always talk about zero as our hero, and we say that probably on every show, and we do that for a reason, because not only are we seeing clients come in with 6, 7, 8% returns, as an annual return, but they also have zero risk. There is absolutely 100% zero risk in their account, and there is nowhere else that I know of that you can say something like that where you've got a great upside and zero downside.
Well, let me expound on that because that's a great point, Steve. When we say zero risk, here's what I want to ask our listeners. What if you could put your money into an account where you're letting the insurance companies take the bond risk for you, guarantee your principal, lock in your gains typically on an annual basis, and make sure they don't lose any money. And if the market does take a correction, and folks, if you're listening to this program, the Comptroller General, and forgive me, I don't remember his name yet, basically says that if the United States continues on this path, we are heading towards fiscal bankruptcy. And, so that's why I think the concern with some of the more conservative Republicans is the cost of this health care. I have my theory on it. I'm really wanting to write a letter to the president on it. I really am. And I may, because that's the problem. And if we don't change that, we're going to have some problems. Now, what may curtail that, at least for a time, is if the jobs come back. Right now, there's a lot of jobs coming back from overseas already. We're seeing this Trump effect. And yet you got people on the other side of the aisles that are just trying to derail everything. And I listened to an interview with Alan Horowitz, I think it is, and he was on a program, and he basically said that the left-leaning cities are the cities that are having the most problems with crime, with economy and everything, and that's
with their
the
budget.
pattern. With the budget, yeah, they're going broke.
That's right.
And this other, the Comptroller General is saying, you see what's happened in Greece, we see what's going on in Puerto Rico. Puerto Rico wants to be a state now, and because they can't handle it financially, it's happening across the board.
Yeah, they're broke.
So, if we don't, what is it? Insanity is doing the same thing over and over and expecting a different result. Well, I would say that half the people in Washington need counseling. What do you think?
Half?
Well, I'm being generous.
I'm going to like 99.9%. Absolutely.
So it's kind of crazy. But folks, you can reach us again at 864-989-0176. You can go to mymoneyissafe.com. Now, folks, what we are offering today is if you would like an IRA review or 401k review, especially like we're saying with the market being high, this is the perfect time to review these accounts and look at some safe money strategies so you can establish a foundation. You see, here's the problem, Steve. Many of these people, they'll go to a bank because the bank's got a connection with this company. They jump in and they go with a guy that's fresh out of college, that's giving them financial advice based on theory. They stick him in a bunch of market-related mutual funds and stocks and this and that, and it's all guesswork. And the client's money is now exposed. So now he goes out of the fire into the frying pan, and instead of taking the bird in the hand and making that money safe and foundational. Now, I'm not saying don't have money in the market. I'm saying right now the Wall Street casino is not the prime place. Steve, do you realize what the market is going up as high as it is, that when this thing does take a correct, it's going to be huge?
Oh, absolutely. We were talking about that before the election, before this huge jump that we've had over the last several months. And nothing has changed. I've said it over and over on this show. The fundamentals are still exactly the same.
Absolutely.
If anything, they're worse. And so, it's continuing to get worse, so no doubt.
Well, and so folks, give us a call, 864-989-0176. You can email me at greg@mymoneyissafe.com, or you can email Steve at steve@mymoneyissafe.com. Also to remind our listeners that Steve, we have an affiliation with his company that is also handling property and casualty. We can save you a lot of money on the homeowners and things of that nature. So again, give us a call. We're almost out of time this segment, but I want you to tune in as our phone lines are open during the show. Call an operator. We'll be glad to talk to you. This is Greg Elie of the Prosperity Group.
Facebook Live fans, that's how the first segment goes. I'm going to drop this mic just a little bit if that's okay. I don't think it's in the way. Okay. And I think I can see you. Just don't go any further to the left, Greg.
To the left?
Yeah. To your right, I'm sorry.
Yeah, that's what I'm trying to figure out.
Yeah, come more towards me a little bit if you can.
Well, then I'm looking away from you. That's the only thing.
That's all right. I'd like to say something in this segment about what we're doing for the charity, the Greenville Children's Cancer Center. Is that it?
Yeah.
Okay, be careful when you address the Facebook people, because this is gonna run on Saturday, and it's not gonna make any sense to your listeners who don't know you're doing it.
What did I do?
If you're watching on Facebook Live.
Did I do that in the very beginning?
Yeah.
Yeah. Okay. Thanks.
Yeah, probably what you need to do is let them know that they can look at the show online that's pre-recorded, the pre-recorded version.
Yeah.
On our Facebook site, right?
Mhm.
Okay.
Okay, I'm recording when you're ready.
Oh, then the song. Let's go with, Steve sent you the one, but it was the same one that
Your
sent me.
quality is not very good.
Of what?
It's the outside.
Of which one?
Song for Mama.
Yeah.
We already have that.
Yeah, I know, but that's the one he sent me.
Yeah, that one. Yeah, okay. All right, so let's do Lavender Honey. This
Okay.
segment, yeah.
All right, I'm recording.
Okay, folks, welcome back. This is Greg Elie and Steve Lewis of the Prosperity Group Advisors, LLC. And we are talking today about not trying to time the market. This is a big problem that we're seeing with a lot of folks that are kind of in limbo again, hoping to get a little bit more. And, it's interesting. I think the Rockefeller's great-grandson died. I think it was yesterday or the day before. I mean, this show is airing on Saturday and Sunday, but we record on Wednesdays. And I think it was on the 21st. Is it the 20th or 21st he died, which they're saying is an end of an era. You realize that the three great industrialists, Carnegie, Vanderbilt, and Rockefeller, all competed with each other, didn't like each other, probably hated each other, and we are still dealing with the ripple effect of the control. Standard Oil, Rockefeller, all of that, all of these people have had a profound effect on our lives as we've gone forward. So you talk about the power of the money of that era. I think they said that, Solomon was richer, but those guys were competing up there,
Yeah, and I've said this again several times on the show, but it's worth repeating. And I believe it was Vanderbilt. It may have been Rockefeller, but he was interviewed one time, and they said, "How is it that you're so wealthy?" And he said, "Well, I watch what everybody else is doing, and I do the opposite. So if they're flooding the market, I'm getting out of the market. If they're getting out of the market, I'm getting in the market."
Right.
And so that's exactly what we're talking about today is stop trying to time it, especially the closer you get to retirement, you don't have the luxury of time. You don't have time to make it up. And as we've seen those wild swings in the market, you have to have time to be able to make that up. And as you're getting to retirement, you don't have that luxury.
Well, Steve, we talk about the turtle and the hare.
That's right.
We have a graph in our office, and I need to put a rabbit and a turtle on there to show the difference. But the reality is the market is like being the hare. It's up and down, it's all around, and it can perform, it can do well. But at some point, it's going to run out of steam. The average investor that we deal with is what I call a buy and hold person. They are not in the market daily, and in fact, we had a conversation with a client this past weekend that said, I don't have the time or the inclination or the desire to sit there and be on my computer and look at this. He goes, I want to retire. This person likes to ride his bike, and you know, I mean, I say ride his bike. He looks like he's 45. You know, he rides his bike all the time, and very healthy with that. And I think that might be a good motivator for us, Steve. We'll just go ride with him.
I'm not going to ride.
I don't know if we can keep up with him, but
I'll tie a rope to him and let him pull me.
He could probably do it. But here's the point. What happens is that's the average person that we see. If you're not looking at this on a daily basis and managing the accounts. Now, some people like to do it, and they're pretty good at it. We've met with people that do, but they tend to be more successful than the traditional buy and hold strategists. And in fact, the buy and hold strategists are following the path of the hare. We have a graph in our office, and I wish you could see it, folks, but you know, it tracks when the market crashed in 2002 and 3, and it again in 2008, and now we've seen the graph go up. And our theory is that the next correction is going to be very big. So the time to prepare, the time to go into safe haven is really now, while you hopefully have recouped some gains. And Steve, we're meeting with a client who didn't even capture the gains of this market right now. Meeting with a family member of his, and we're going to look at this account on Friday, and he's, you know, it's gotten his attention. And his financial advisor is a close friend of his. So I said, you know, sometimes that's a formula for problems. I said, because he has no control of the market as well as we don't have control of the market. But I said, the difference with us is you're not going to get a phone call saying, hey, you just lost 50% of your account value.
That's right. And, you know, it's interesting, you talked about day traders or people that are actively involved in their account. And one of the things I hope our listeners picked up on is the fact that you said that we meet with those people all the time.
Right.
You know, don't miss that, because we meet with them because they understand that there's a part of their portfolio that they want to make safe, and that's exactly what we promote. Nothing wrong with being in the market, nothing wrong with day trading, as long as you understand that whatever's in the market or whatever you're day trading, that's play money. That's money that you're not counting on to be there for an income stream for you for the rest of your retirement. What we deal with is the money that you want to make sure that you have a steady, guaranteed stream of income that you can't outlive. That's what we promote all the time.
You know, Steve, hold me to that point. I'm going to ID our numbers real quick. Folks, you can reach us at 864-989-0176, 864-989-0176. Our phone lines are open during the show. Request a Social Security Max report, and we can put that together for you to show you the smart strategy on Social Security. And we've got some really good strategies there. You're not going to get it from Social Security, but also to review your 401k and your IRA. And folks, if you can do an in-service rollover, now is the time to look at that.
Yeah, and real quick, just talking about the auto and home and the commercial stuff that we're doing now at the agency. We've talked about this on last week's show as well. For everybody that gives us a quote opportunity for the next month, we're going to donate $5 to the Greenville Children's Cancer Center,
right,
in honor of Marie and your wife passing. And so anybody that comes in with a quote, we don't have to write it, but a legitimate quote opportunity, we're going to donate $5 for every one of those. So just wanted to let everybody know that as well.
Yeah, no, that's definitely something that's a great cause, and you see the smile on those kids as they're being treated with cancer. We delivered some Christmas gifts a couple of years in a row there, and that was you know, quite a great feeling of being able to do that. You know, you're talking, you know, we're talking about 401ks, IRA rollovers and things of that nature, and this is really the time to look at this right now. See, Steve, we're going to be introducing probably very shortly some phenomenal market strategies for people that want to have a safe approach to the market. The licenses are being completed. We're going to be bringing that in, so I can't go into detail right now. But we're not a one-stop, we're not a one-trick pony. You see, you've got to look at the overall picture. And right now, our tax-free strategies, IRA rescue, folks, if you want to know, if you have an IRA, if you have a 401k, if you don't have a tax strategy on how to liquidate or how to take money out of that account, then you are not fully prepared. Because, you know, we asked the question to the client, said, if you got a $500,000 IRA and it goes to $1 million, is that good? And he goes, well, yeah. And I said, well, what's bad with that? He goes, oh, my taxes doubled. I said, well, yeah.
Exactly.
So we said, okay, so why not why not stunt the growth of the IRA by repositioning the assets into a tax-free account if he's, if they're able to take advantage of that? Or if you can't reposition it for yourself, why not reposition some of that for your children?
Now, not to interrupt you, but when you talk about a tax-free account, you're talking about taking income on a consistent basis for the rest of your life tax-free, as opposed to what would be in your 401k or your IRA,
That is
which
correct.
is taxable.
That is correct. And so what happens, instead of sitting there and watching the account grow, kind of unabashedly till they're 70 and a half and then taking out a required minimum distribution, we can have strategies to minimize that amount. And here's the other thing, Steve, with the side account, like right now, folks, understand that you get bonuses and you get money where we create a pension-like income. Do you know that on the pension-like income portion of the accounts, they don't have to pay their RMD based on that higher value? And that higher value typically in 5 years is going to be up 40 to 50% higher. So what I'm saying is we're running out of time. So
Yep.
folks, if you want to hear this segment, you need to tune in and listen, and we'll talk about that so you understand how these accounts work. This is Greg Elie and Steve Lewis of the Prosperity Group. Reach us at 864-989-0176.
Facebook Live, that's segment 2. We got 2 more to go. 2 more. I think you should go back and reiterate what you were just talking about.
I am.
And say what an RMD is.
Yes.
And then you wanted me to remind you about steady stream of income that you cannot live and
Right.
that. So
Joe, let's go with you on Born Again. So folks, you are seeing the behind the scenes of how we do it. Joe is a master technician here. He keeps us on track.
if you hear a voice in the background, it's not God. It's actually Joe, who he's sort of the man here, and he is the man here.
Well, he is like God in here.
Well, yeah.
I'm not trying to be sacrilegious or anything.
All right, recording when you're ready.
All right, folks, welcome back. This is Greg Elie and Steve Lewis of the Prosperity Group, and the time is flying by today. Again, our phone lines are open, 864-989-0176. You can call an operator. Go to our website, www.mymoneyissafe.com. We've been getting a lot of people contacting our website. If you contact our website, make sure you leave a phone number. I do phones better than email. You'll get called back quicker. We'll have, usually my daughter, Annie, is who you hear her singing some of the music on the show. In fact, the song that was just played was With You I'm Born Again, and that was myself and my late wife that recorded that in 1988. And so again, when you contact our website, leave us a phone number. We'll call you, and if you want to get together, we'll set up a time to do it. We are getting a lot of response from our show. And folks, we're going to be setting up some seminar dates that I want you to consider, and we'll be putting that out on our website as well. But Steve, we're talking about steady stream of income. We're talking about the economy. We're having a seismic shift, if you will. I was having an interesting conversation with 4 attorneys yesterday, and we were talking about what's going on economically. And what's really fascinating, Steve, is we had one person who's got more of an international connection. And the internationalists, if you will, had complete knowledge of what's going on in the Middle East and in Europe, where the attorneys are still influenced by what they're reading in the media. Now, very intelligent people, and it's kind of really, a lot of stuff's out of my league, but a lot of the stuff that I know is out of their league. So it's not a question that everybody's good at what they're good at. And the thing that amazes me is how much influence the media has, whether it's the fake media, the real media. And I believe you have to go outside of the box and not just read the local paper or watch the local news. When I was young, my dad would watch CBS Nightly News with Walter Cronkite at 6:30, and everybody had a lot of confidence they were getting the facts. And I remember the news being a lot more accurate than it is now. Now, if you turn on CNN or if you turn on Fox or if you turn on MSNBC, you're looking at like 3 different versions of reality. I mean, they don't even resemble themselves.
That's right.
And what's interesting, some of these stations aren't even objective. I noticed one particular station, they always put 2 sides of the coin. The other station, they put 6 sides of all the same coin. and it's almost like indoctrination. And so, you know, young people, if you're listening to this, you need to look and you need to be broad, because what's happening is when you're told how to think, it becomes George Orwell 1984. And I won't go into that right now, but I mentioned a couple of things, and the guy looked at me. One of them said, "Greg, that's just conspiracy." I said, "No, it's not." I said, "Check your facts." I said, "I'm not talking conspiracy." I said, "You want me to talk conspiracy? I can go there." I said, "But no, you know, check your facts here." And I was shocked at some of the basic facts. We were talking about 9/11 that have gone just totally under the radar, and nobody's looking. And I'm not saying it's a conspiracy. I'm just saying some of the things that occurred were strange, and you know, that was brought up. And one of the things that I brought up, I won't get into it now, you know, caused a few frowns of consternation. It was like, okay, but here we go. But you know, this is what, folks, we're telling you right now. Get the review of your 401k, your IRA right now. You probably caught up from your losses. Folks, we can infuse your accounts to create a tax-free money. When I'm saying infuse, you can get a double-digit bonus, if you will. And some of these accounts, now hear me very carefully, folks, no fees. No fees. We get paid from the companies, not from your money, all right, in many of these accounts. So it's important that you understand when we say no fees, that adds up. Steve, I looked at a variable annuity. The lady, well, it's the man that we're seeing this week. The company had in 10 years, in 4 years has made 15%. You know how much the clients made?
How much?
4% last month.
Wow.
And that was it.
Wow.
So they're 9% ahead of him, or 11, whatever, 9% ahead of him. So
it should never be like that.
No, it should be a win-win situation,
That's right.
And it's not in that scenario. So it's important that people understand that.
No, you're right. And, you know, going back to the news for a second, you were talking about this. We've mentioned this many, many times on the show, and actually sometimes people, I guess, accuse us of being fear-mongers, and you know, the truth is we're reality. We're just talking what reality is. And if you look at the market cycles, if you go back and study the market and its ups and downs trends, it's very cyclical, and it's not predictable like by date, but it is predictable by pattern. Right. And there's typically a 7-year pattern. We've talked about that before, 2001, 2008. And so 2015, we missed that. We missed it, as we've talked about before many, many times. There's several reasons, but mainly because the government was pumping money into the market. Right. You know, QE1, QE2, QE3, and on and on. And so the point is that...
We've never been down that road yet.
We've never. And so we've missed that drop-off point, but it doesn't mean that it's not coming. It's mean that, as you said earlier, it means it's going to be bigger this time.
And that's my concern. And when the Comptroller General of the United States is saying that if we don't change our present course, not if, it's we will have a government shutdown, that the economy will drastically change. And I think that's why people voted the way they did. They wanted a change. But you know what? The people that have the power don't want to let it go.
That's right.
And the people that should have the power are the people.
That's right, no doubt. I want people to think about this for a minute. So just pause as we've been talking about all this. Think about this for a minute. You're going to retire the day before the market crashes, 2008, right? So you are still in the market. You're ready to retire. You're ready to rock and roll. And all of a sudden, the next day, the market tanks 40%. What are you going to do with the money that you plan to have? That 40% of it is now not there. If you were doing what everybody else is doing right now, or what a lot of people are doing, you're in trouble. You're
That's
back.
Right. That's right.
You're not going to retire. You're going to get another job.
You're going back to work.
That's right. With our plan, it doesn't matter when the market tanks. It doesn't matter what the market does. Your income stream is guaranteed for the rest of your life. You cannot outlive it. Period.
Well, let me. I'm glad you. Let me segue into something that I wanted to bring up earlier on this. Here's the problem, Steve. If they are in a position where they're retiring and they need income immediately, and the market takes a hit, the fact that they're taking income, it compounds their problem. Because now the account's going down, which means they're going to be told, hang in there, it'll come back. So now, let's say they're taking $3,000 a month out of their account. They're depleting their account $36,000 a year. You know, some of the monies that we add in people's account, by just moving it over into our safe money strategy, they're getting a year and sometimes 2 years income that could be potentially put into the account. And if they need income early, they're going to rest and sleep easily because they're not going to see that 40% hit. So that 40% hit, it can be compounded a whole lot worse if they're taking income.
No, that's exactly right. As you said, their account begins to get depleted. With what we promote, it absolutely does not happen. And so you have, again, a guaranteed stream of income that you know what's coming in every month for the rest of your life, guaranteed. You cannot outlive it.
Steve, we need to talk about some of the softwares because, folks, we've got some software I believe that no one in our area really has. We've got some software to show you exactly how to count on what income you need, what your fees are, and folks, you'll be surprised about some of the hidden fees that people have. We met with someone the other day and they said, oh yeah, this is our fees, and then when we did the analysis, they didn't see these hidden fees that were adding up and were basically siphoning profits or losses out of their account. And folks, if you want us to do a review, we are offering a Social Security maximization. And I've had people, because what's happening, Social Security is not as big as the hot button as it was. Folks, you need to have us review the Social Security. In fact, Steve, we probably need to schedule a Social Security seminar because what's happening, that was the hot button for 2 years that everybody was talking about. Mm-hmm. Now that they changed some of these strategies, everybody's forgetting about it. But do you realize that Social Security makes up close to 65% of retirees' incomes? If they make the wrong decision, I had a talk with my sister-in-law, and she said, I can't wait, I'm 62, I'm going to take it. I said, would you just wait? And I said, I can do this, it's not going to cost you anything. I said, let me run the numbers and see if it makes sense. And she, you know, I know what her thinking is. She's tired of working, but that's a 25% hit if she takes it the wrong way. I said, if it's not that significant, I'll tell you. But I said, if it is, don't you want to know? You know?
You know, it's not uncommon for us when we run these reports for us to be able to show people maximizing their Social Security by well into six figures, 100,000, you know, sometimes it's 70,000, 80,000, 100,000, 150,000. So it can make a huge difference in the amount of income that you get over your life. And there's no cost for that report. We don't charge any fee for that.
Well, not only that, Steve, we can show them how to create an asset.
That's true.
There's a lot of people that are coming to retirement. They don't have as much money as they need, but they're planning on working till 70. You know, what the average person is going to do is they're going to wait till they're 70. But we can show you a better strategy, folks. I mean, a much better strategy where you gain control of the money. Now, folks, do you want the government to control your money or do you want to control the government? How much confidence do you have that the people in Washington are actually controlling the money?
They're controlling their money.
Well,
for their benefit.
Right. And that's the problem, you know. And a conversation that came up at breakfast with some of these attorneys was, you know, everybody missed their career choice. We should have all gone into $40,000 a year government jobs and retired with $1 million pensions.
Yeah.
I mean, that was not the intention of the founding fathers.
That's right.
They didn't want professional politicians. We need less professional politicians and we need statesmen. And but we're in the world of professional politicians, unfortunately. Yeah. Folks, we are almost out of time this segment. You can go at 1-800-440-0434 if you're out of the area. You can email us at greg@mymoneyissafe.com or steve@mymoneyissafe.com. Send us a request for a quote for automobile insurance and homeowners. We're out of time. Tune in next segment.
Facebook, that's segment 3. We got one more to go.
Okay, let's do Song for Mama.
If I talk for just a second on a client that I met with PNC this week, I'll be real brief.
No.
I don't want people to think that I'm trying to be the Geico and save you money. I want to save your assets. You know. Where's my phone? It's up there.
We should do a show and call it "Kiss Your Assets Goodbye."
We're on Facebook Live.
Oh, just kidding.
Makes sense.
It does, yeah.
I'm rolling when you're ready.
All right, folks. Well, if you want to see some of the off-the-air little jokes that we have between ourselves, you can go to our Facebook site at Prosperity Group at, I don't know, Facebook at Prosperity Group?
Yep.
I don't even know how to get there,
Just
Steve.
go to Facebook and then type in the Prosperity Group. If you haven't liked our page, like our page. Then you can go in and watch some of the archived videos that we have for the shows.
Yeah, and you know, we get a little giddy sometimes talking to each other in here. It's a dark, auspicious room, you know, right here. It's got a lot of ambiance in here, so it keeps us real focused on what we're talking about. So we get a little bit giddy and talk about some of this stuff.
Some of the more interesting topics happen when we're in between segments.
This is
sure.
this is true. This is true. Well, look, we're talking about strategies to make your money safe. Folks, if you have a 401k, you have an IRA, and we have a lot of large companies that, people that worked with large companies, and they move over their 401ks and their accounts with us in our safe money strategies. And Steve, it makes sense. I mean, it really does. When you can lock in your gain, you know, and I've used this analogy before, how much sense does it make that I take my money to a company and the company says, hey, look, Steve, for you taking the money with me, you're going to take 100% of the risk, and we're going to charge you a fee, and we're going to allow you to take 100% of the risk, and if there's money to be made, you'll get it after we get our fee. Think about that arrangement. Is that really a good arrangement?
Thank you. I mean, please, sir, may I have another?
Yeah, I mean,
You know?
this is the, folks, do you understand what we're saying? We're not trying to reduce it to the ridiculous, but there is a lot of that element in what we're talking about. What Steve and I are talking about, you come to see us and we look at our safe money strategies. In many of the accounts, there's no fees unless you're paying for a specific guarantee.
And to your point, we talked earlier in one of the other segments about one of your clients that had come in and that had made 6% this past year.
Right.
And that was a net 6%. And
Right.
as you said, there were no fees or anything that were involved in that, but that was a net 6% to his account.
Right.
I mean, people need to understand that, and that was safe. That was 0 on the downside, 6% on the upside.
Well, here's what's interesting. One of my clients, and I've talked about him during the show, obviously I won't mention his name, but we reviewed his accounts. He's been with me since 2007, all right? We took care of his entire portfolio. You know what his average return has been since he's been with us?
What's that?
6.07%.
And I hope people caught the fact that he started in 2007, right before the market
Right
tanked.
before the market crashed.
And how much did he lose when the market crashed?
Zero.
Absolutely
He lost zero. Zero was his hero. And in fact, he was one of the few people that called. He said, great, now you said my money was going to be safe if the market corrected. Did I lose anything? I said, absolutely not. You know, he was okay with a 0% return. In fact, he didn't get a 0% return because the way we had his accounts, he still made some money. And Steve, that's 6% since 2008. I said, do you realize you've weathered, well, and in our other client that we show on the testimonial, she's averaged around the same return over time. Now, here's the problem. A lot of people, when we say that, they got in 2012 when the market was up and down, up and down. They haven't made as much until recently. So, you know, the idea is that you're going to make somewhere between 3 and 6% on average. But when you look at the perks, the bonuses, the pension-like income, folks, when I use the term pension-like income, nobody's talking about this. We're the only ones talking about pension-like income. You got people calling themselves the original, giving deadlines, giving all of this stuff. We are showing you sound strategies. I've been doing this for 29 years. Steve, how long have you been doing it?
26 or so, yeah.
So between us, we've got almost 30 years of experience. You've got other people. Well, Steve,
That's over 50. 29 and 26.
Well, Steve, I'm going to be 57 this year, and every one of my children's going to remind me of that.
But between us, we have well over 50 years of experience.
Yes, we do.
Yeah.
We do. And here's the point, folks. We have seen this thing through. We've seen the tech gains. We've seen the market corrections. We've seen all of this stuff. And and this stuff works. It's sound. But you know what's interesting, folks? Our tax-free strategy has outperformed the market for the last 25 years on a buy and hold basis. And that tax-free strategy is perfect for business owners. It's perfect for young IRA owners. In fact, we're meeting with some people that are young IRA owners, and we're going to show them some rescue strategies that they probably never heard. And folks, these strategies work. What if you could make 6-7% on your money with no risk, and you never go south, and there's a way for you to get tax-free returns? Do you understand what tax-free is, folks? Tax-free that does not show up on your Social Security. A lot of people, when we ask that question, they think we're talking about muni bonds. If we're talking about muni bonds, it still calculates towards your Social Security mean tax. On tax-free, it doesn't show up on your tax return. That's truly tax-free.
That is absolutely tax-free. You know, real quick, I know we're almost out of time. I wanted to mention two things. I met with, or talked with somebody the other day that in 2008 lost 7 figures in their account. And they're just now getting to the point where they've recovered most of that.
Wow.
7 figures. And so again, I go back to the point that I had before, which is if you're coming close to retirement, you don't have the opportunity to play with that money if you're counting on that for income. The other thing, real super quick, I know we're up against the deadline. From an auto and home standpoint, I met with somebody the other day who very well off, and the agent that they had been with just completely did a disaster with their program. If they had a loss right now, they would lose a significant amount of what they have worked so hard to gain. So what I try to do when we sit down with somebody is really do what we talk about, you know, is really planning, making sure that there's no gaps and no holes in that coverage. So how do you want to wrap this up? That was pretty much all I had to say.
Well, Steve, look, we've talked about a lot today. I want to remind our listeners, 401k in-service rollover. If you have a 401k, folks, now's the time to get it reviewed. You got an IRA, now's the time to get it reviewed. If you've got exposure to too much risk, let us run a balance sheet for you to show you the best way to balance your accounts. This is crucial, folks, what we're talking about. There's a lot of changes that may loom ahead. The unsteadiness is reflected. You look at some unsteady showing and there's a big there's a correction that takes place. So you don't want to be adversely affected by all of these idiots, if you will, that are trying to scramble for power and they don't care about you or I. I mean, that's the bottom line. I'm just calling a spade a spade. Anybody agree with me? Email me and let me know. Email Steve and I and let me know. Really look forward to hearing for your emails. Our phone number, 989-0176, is local. We are a local company. Our phone lines are open now. Call the operator, let us know, and we'll follow up with you and set up a time to get together. Folks, thank you. God bless you. Have a great weekend. This is Greg Elie and Steve Lewis of the Prosperity Group.
And that's how we do the show. Thank you all for tuning in and watching.
Folks, tune in again on the Facebook Live, and you see a little bit of a different perspective on things. And God bless you. Have a great day.